What did the Fed do? OMG. The Fed held the interest rate, paused, but a lot of that was built into the market. Everyone was saying that the Fed was going to pause. And in my estimation, I honestly think that the Fed didn't have the backbone to do what he needed to do for the economy. That's my 2 cents. But I'm going to present a case that I don't think that the Fed did the right thing, but I'm just a guy. I just also found out that the Fed is a lawyer, not an economist. Does that make him any weaker in order to do what he's got to do? My answer to that is no. He's got a lot of people around him who have economic backgrounds that are there to help him to make the decisions. But overall, he's the one that's got to make the decision. And I still don't think that it was the right decision to make. But let me prove my case. Let's get right into the software. Now, from the software, we're looking at the market timing graph. As a VectorVest subscriber, you have access to everything that you need to do to keep yourself on the right side of the market. If you're not a subscriber to the VectorVest software, you need to take advantage of a 99-cent deal. Go to www.vectorvest.com/YT. 99 cents gets you access to world-class market timing. A lot of people feel that you can't time the market. We've been in business for over 30 years timing the market, and we've never missed a major move in the market. So as we say that, I'm looking at the VectorVest composite. After the news yesterday about pausing, you would think that the market was going to go, woo, let's go, let's rock and roll. But today, it gapped down, big down bar today as well. Now, we always know that there's two moves after the Fed decision. There's always going to be one move is the false move. Could this be the false move? Or could the market still have some more downside? Well, when I talk about more downside, I look at a lot of other things that are going on in the market, which I'll get to in a second. I also want to touch on our indicators, the MTI and buy to sell ratio. They are at the levels where the market is starting to look for a bottom. Are we at a level where the market is looking? Is it bottom fishing time? Well, our indicators let us know that it possibly is. Another thing, we've got a head and shoulders pattern here. Shoulder, we got head, we got shoulder. Here's the neckline. And guess what, folks? We just broke through the neckline. Again, I think that the market has some more downside, but for how long, I don't know. Let's talk a little bit about the downside. What is making me feel the way that I feel in regards to the Fed's decision? Well, the whole idea of raising interest rates is to go after inflation. There's some inflationary things still going on that I'm sure that the Fed took into effect, but decided to pause nonetheless. Oil. Here's oil. U.S. oil, man. Bottom left, top right, oil is on the rise. Interesting that oil is on the rise, but a lot of the stocks in the oil industry are not correlating to this move. There are a few that are looked just like this. There's a lot more that are not. I got my own feelings in regards to the oil. I talked about it in my live stream today. Go back and take a look. And I don't want to get political. But oil is on the rise. I'm looking at the 3 and the 8 exponential moving averages. Yes, oil is pulled back, but sitting at over $90 a barrel. Why? Because Russia and OPEC cutting back on the supply. It's going to automatically make oil rise. And that's the case. But again, a lot of stocks are not responding to that move. And again, I've got my opinions as well. But looking at it in the VectorVest system, oil is on the rise. I am still currently playing oil, even though it pulled back last couple of days. What else is in this list? China. China is an issue as well. China is the biggest buyer of a lot of goods across the globe because they're so big. And here's the bearish side of China, Yang. This is the ETF short. I like the move on it. I'm still bearish on China. And that's going to add to the woes going around globally to hurt a lot of people's economy. What else is in here? Banks. There's a bubble getting ready to happen. I don't know when it's going to happen, but there's a bubble getting ready to happen. And the regional banks, more of them are going to have to report losses on their short-term things that they've done. And Bank D is back on the rise again. I helped you guys make some money back in Bank D back here. Sitting in the channel, now back in the channel, but the 3-8 cross. Nice open candle today. No wick at the top. Keep your eyes on that. And my last thing is on loans, student loans. Sally Mae, look at this, going down, 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 down. If I was playing this, I'd be buying puts on it, but Student loans are going to come into play soon because the people who did not have to pay back loans or were pausing on that, they're going to come back to the forefront as well. All of these things are hurting the economy or are some sense inflationary. And if that's the case, inflation is going to rear its ugly head. Let's talk a little bit about that. I'm going to bring up a market climate graph, and I'm going to put this on, I don't want to put it on end of week. Let's go put it on 1 year. And here we go. We're looking at the earnings trend indicator. Looks at the stocks within the S&P 500. We're looking at CPI. Notice that CPI is starting to tick a little higher along with the earnings trend indicator. The long-term T-notes on the rise and the 50-day moving average on the earnings per share on the S&P 500. Companies are still making money. But what's the other side of that? A lot of these companies are guiding lower. All right, so these are the things that I'm taking into effect when I make the decision that I don't think that the Fed did the right thing, especially if inflation is starting to rear its ugly head again. They've got another 6 weeks before they make another decision. I think the talk was hawkish enough that I think on the next decision, there will be another raise again, at least one more going into the end of the year. Then we got to also think about the Santa rally. There's a lot of things going on in the market. I still think the market has some downside, but do we finish higher for the end of the year or not? That leaves a lot to be seen if that is true to form. Going back to the market timing graph, let's go put this back on end of day, 1 year. Again, big gap down. I think, given with the situation with the market starting to look for a bottom, I think that the market might have a run up tomorrow. And if I think that the market still has legs to the upside, we've got to break through this level of resistance sitting at the value of 57.33, which served as a beautiful level of support. Notice it 1, 2, 3 times before we finally broke through it. So that breakthrough does let me know that the market may have some more downside, but for how long? Maybe down to this level of 55.17. That's a nice enough drop, but let's keep in mind that the MTI and the buy to sell ratio are telling us that we're looking for a bottom. Doesn't mean that it's going to pivot on the dime and go back up tomorrow. What do I do given the information of the pause in the market? What do I do right now? Well, there's a couple of things that I would consider. One, going to the viewers tab, going to our watch list. I am going to look at contra ETFs, but from that perspective, let's go find, here's my ETFs. Let's do it this way. Let's go to the unit search. Let's go to ETFs. Let's go buying contra ETF. The bad thing about this is if we're looking for the market to start to look for a bottom, I'd be very cautious with looking at contra ETFs. If I decide to pull the trigger on them, you know what I would be looking for? Let's go back to let's go find ETFs. You know what I would do? Just in case, I would go to the non-leverage contracts. These are 1-to-1. All right. These are 1-to-1. Notice that the majority of them were up today with a big down day. But I would go 1-to-1 instead of looking at leverage contra ETF. These are hurt a lot less if a market has a big up day. I think that, do I give the Fed props that maybe he knew that this was coming on, that the market was going to fall, that it was going to naturally start to rebound, especially if the market is looking for a bottom? I don't know if I want to give him that much credit. But if the market does continue to go down, I would consider stepping in from a trading perspective, non-leverage contra ETFs. If the market does start to rise, what else would I do? I'd go to the unit search tool and I would go take a look at searches bottom fishing. Right? And I think that that is a good spot to be if the market really wants to show that it's got some legs to the upside because the market is so oversold. I still think that the Fed didn't do the right thing because he's supposed to be in charge of taking care of the economy, not trying to take advantage or help people to make money in the stock market. That's not his job. His job is for price stability. And if we look at inflation, it's cooling. Is it cooling off enough? If inflation is starting to rear its ugly head, that's what he's supposed to be going after. Right. So in my opinion, what would I set you up with right now? Non-leverage contra ETFs if the market still has some more downside, but it's going to be a little risky because the market's at a level of looking for a bottom. And then the other side, if the market really does decide that it wants to go up, again, as a VectorVest subscriber, you have access to all of our bottom fishing searches already here for you. And I take advantage of that. I don't know how long that this upturn lasts as well because of all of the negative news, whether it's the banks, whether it's China, whether it's oil. There's a lot of things really trying to hold the market down. Less people looking for work means that they're working. And the job market is still not where the Fed wants it to be. And people are spending money. That got to do a lot with. That's another bubble that's going to happen. So there's a lot of things that I think that are still holding the market down. We'll see. That's the guidance that I can give to you from VectorVest. And some of this is my own insights, but the majority of this that I've shown to you is based off of the VectorVest software. Get your list ready. Get your shopping list ready. But if the market still has some more move to the downside, you can still make some money. But I would do it with non-leverage contracts. Folks, that's what I got going on. Hopefully, I've proved my case that I think that the Fed didn't do the right thing. A lot of people will say, what do you want the Fed to do? Kill the economy? He said a long time ago when he first started this that he was going to cause the economy pain. And I still don't think that we felt the pain that he thinks that we should have felt. That's my opinion. All right, with that, folks, this video is over. Till the next time, see ya. Hey VV Nation, do you want to increase your profits and generate income? Well, you can. For 99 cents, we'll give you access to the VectorVest system for 30 days. And guess what? It's a money-back guarantee. If you don't like it, we'll give you back your 99 cents. But folks, you're going to have access to the best software out there, the best guidance at any price. All you have to do is go to www.vectorvest.com/YT. Folks, it's a no-brainer. Go there right now and take advantage of your 30-day trial for 99 cents.